Uber is a huge business. Coming out of nowhere, it contributed to rewriting and tearing up the guidelines for inner-city transportation. The company, along with Lyft in the United States, has ingrained their ride-sharing business model and itself into American culture. While Uber is renowned for its rapid expansion, staggering earnings, and massive fundraising, most people are unaware that Uber actually loses money. And a large amount of it at that. Welcome to Just Tech. In today's video, we'll see what we need to know about the economics of Uber and why it's losing money. But before we get into the video, please share and subscribe to our channel for more videos like these. Also, tap that bell icon for notifications, and without further ado, let's get into it. Instilling in investors the notion that a company may lose a ton of money and still be considered successful is one of the tech industry's most important breakthroughs. Uber, a leading provider of ride-sharing services, is the newest Silicon Valley wonderkin to demonstrate this. A major portion of the company's $1.2 billion loss over the past 3 months can be attributed to the investments in other firms that didn't function well. However, according to research, customers are spending more on trips and food delivery, which is why Uber's shares increased by 12%. In comparison to a year ago, third quarter revenue increased by 72%. Despite the uncertain global economic environment, CEO Dara Khosrowshahi told analysts that he is confident in our ability to deliver healthy top and bottom line growth. Now that's impressive. At a time when many internet companies are finding it difficult to navigate the current global economic uncertainty, revenue more than doubled to $8.1 billion in the 3 months leading up to June, an increase of 105%. Even yet, the company reported a $2.6 billion net loss, but investors ignored it, and shares ended the day on Wall Street up to over 19%. Uber mostly blamed the loss on the depreciating value of its holdings in financially troubled businesses like India's Zomato, Singapore's VTC Grab, and US self-driving car startup Aurora. Uber, which is emerging in the wake of the 2008 financial crisis, is comparable to another disruptive innovation that came before it, the supermarket. King Cullen, often regarded as the first supermarket and a prime example of the resource integration paradigm that gave rise to the Uber ecosystem, was erected in 1930, in the early months of the Great Depression, on the site of a vacant garage that Michael J. Cullen had leased in Queens, New York. Uber's founders, serial entrepreneurs Travis Kalanick and Garrett Camp, used clever resource integration to create the company, similar to how King Cullen did. None of the large dry grocery chains that were already in operation, including 2 of Cullen's old employers, Kroger and A&P, had considered doing what he did at the time of his breakthrough. However, the idea's advantages were obvious and it gained popularity very quickly, which fits the description of disruptive innovation in the textbook. The resemblance doesn't stop there, which is unfortunate for Uber. The King Cullen business model proved straightforward to imitate, and eventually the major chains did so. With a nationwide market share of 16.1%, Kroger is currently America's largest grocery chain, while King Cullen is still a regional brand. Since the launch of Uber, a number of rivals have appeared in what is now referred to as the gig economy, including disruptor 50 firms like Lyft in the ride-hailing industry, DoorDash in the food delivery industry, and Convoy in the freight and trucking industry. Uber has encountered an array of challenges during the last 10 years, both internal and external. Aside from the unfavorable recordings and emails from the former CEO and co-founder Kalanick, they include charges of sexual harassment, a wave of firings connected to an investigation into the workplace, the alleged dissemination of a rape victim's medical records, and the alleged distribution of medical records. In addition to regulatory disputes and political pressures, there were also union conflicts, legal disputes with Alphabet, significant losses, and investor fighting. Uber, at least this time, is a fool's errand if those kinds of things matter to you. Uber is providing the goods if, on the other hand, you subscribe to the tech industry's adage that's all about growth rather than profit. Gross bookings for Uber increased by 26% to $29.12 billion. It predicts that gross bookings will increase by as much as 27% from the same period last year. The company then hired CEO Dara Khosrowshahi in 2017, who had been running in Expedia since 2005 and was credited with growing its global footprint through a number of online travel booking brands, including Expedia.com, Hotels.com, and Hotwire. This choice put an end to Uber's protected hunt for a successor to Travis Kalanick, who resigned after a shareholder uprising and is now regarded as one of the most illustrious and infamous Silicon Valley startup founders. But before we move on, for more interesting content like this, make sure you're subscribed to our channel. Hit that bell icon to receive notifications whenever a new video is posted, and we'll get right back to the video. Similar to Elizabeth Holmes at Theranos and Adam Newman at WeWork, his rise and collapse at Uber were the subjects of a television drama. We are well positioned to deliver expanding profitability over the coming quarters, Khosrowshahi said. With continued rigor around costs, discipline on headcount, and a balanced capital allocation approach, all supported by our leading technical and operating capabilities, we are well positioned to deliver. During the second quarter, Uber also paid drivers $427 million in incentives, spent $27 million on refunds, spent $142 million on advertising, and paid $411 million in taxes and other fees. In total, the Wall Street Journal figure shows that $9.2 billion in so-called contra revenue charges were added to Uber's $12 billion in gross bookings. Now that we know the real revenue for Uber's second quarter, we can calculate it as follows. $2.8 billion is net revenue for Uber from gross bookings of $12 billion minus contra revenue expenses of $9.2 billion. This is the money that comes in the door, from which we will deduct Uber's cost of revenue, what it costs to supply the product, its operating costs, salaries, office space, etc., and other expenses to find out where all that money went. The majority of reports claim that Kalanick had a fanatical focus on Uber, but in 2019, when he resigned from the board and sold all of his shares in the ride-hailing business, Kalanick cut his final ties to the organization that he co-founded. He attended the business's initial public offering, or IPO, 2 years later at the New York Stock Exchange, although he was not on the dice with corporate executives. The corporation received an initial valuation of over $80 billion before dropping like a stone. This experiment, which involved going public with a firm at an enormous valuation that disclosed in its S-1 filing that there was a risk it might never manage to turn a profit, caused a significant shift in opinion among knowledgeable investors and everyday consumers. Josh Brown of Ritz-Holtz Wealth Management referred to it at the time as a time's up moment. And that is all for today. If you like this video, then please give us a big thumbs up and make sure to subscribe to our channel, as well as hit that bell icon to receive notifications whenever we post a new video. Also, express your valuable thoughts in the comment section below, and feel free to spend some time watching some other videos on the channel. But until then, goodbye.